YouTube as well. That's Florida Talk Real Estate LLC on YouTube. Ton of informational videos there for you to consume and live streaming on a Saturday for 2 hours. Thank you for being with us no matter how you're finding your way in on this Saturday. I'm your boy Johnny C, your air traffic control. Let's get a starting lineup on a Saturday morning. We got Mike Rauch, the mortgage guy from the mortgage firm. Good morning, Michael.
Good morning, Johnny C. Good morning, South Florida audience.
Nice to see you, my friend. Great to have you with us as always. Man, it has been more than a minute since I've been able to say good morning and welcome to the show. We always like to have the big dogs with us. And when you got the law offices of Paul A. Krasker, there's one big dog, and that's Paul Krasker. And he's right here with us on a Saturday. Paul, how are you, my friend? Nice to see your smiling face.
I'm doing great. It's good to see you. I noticed the glasses now.
If I want to be able to read, I need them. Yes.
Makes you look very erudite.
Oh, well, thank you very much. I'm going to have to look that up during the break. I don't know if I should be thanking you or not.
Very smart.
Oh,
yes. Ready to listen today. Yeah.
Oh, definitely am. Great to have you with us, Paul. And, of course, always a pleasure to say good morning to my guy, Jimmy D. I've been telling you for over a decade now. He runs the top producing Keller Williams team. At Keller Williams Innovations, you'll find the Florida Home Pro team. That's where you'll find Jimmy D. Jim DePola, how are you this morning?
Very, very good, everybody. I'm so happy. I just put on the notes on while you were telling us we were live on Facebook, I realized, and YouTube, I realized we were not live, but I was typing away notes saying we have an all-star cast today. I'm so happy to have Paul back with us. It's great. One of the shout-outs is related to Paul, so we're going to be talking about that in a second. And today, the reason why I asked Paul to come on is I want to talk about contract stuff. We've had a lot of craziness go on in the last month and a half or so with some customers that, of trials and tribulations they've been through. And I thought it was a good idea just to get a lawyer on the show to talk about, that when you're really in a contract, you have to follow the contract. And if you don't, there are repercussions. And people don't really get that sometimes, even though you might tell them over and over again. So we're going to go over that because it is kind of interesting stuff because it can get very emotional and sometimes costly. So we're going to talk about that with Paul. I'm looking forward to that. Also, we're going to be talking about if you're buying a house, it's so 2008. I put out a little Facebook video yesterday, I think, saying, hey, should I go out and watch Indiana Jones and the Crystal Skull? Or maybe I hear that Twilight movie is pretty good and found out that Juno was the #1 soundtrack in 2008. And I thought maybe I should go out and do all those things because we're back to 2008 with mortgage rates. And we're going to be talking about that a little bit with Mike Rauch. But we're also going to talk about Mike because he's also related to the shout-outs today because we have a bunch of buyers we're working with. And let me tell you, Mike's got this super-duper app now, this mortgage app. I just love it. Mike created his own little thing, like a slide and scale tool that we used. We called it a mortgage tool a while ago. But man, this new app, it's like on steroids. And I'm just amazed about it. So we're going to actually talk about it on the air and talk about the benefits of knowledge is power. And this app gives the realtor and the customers super knowledge without having the mortgage broker even around. So we're going to talk a little bit about that. We were supposed to have Ross come on the air today, but he hasn't shown up yet. So maybe Ross is coming, maybe he isn't. I did invite him, so we'll see what happens. I thought I was missing somebody. But if he does come on the air, we might be talking about how the state legislature is trying to fix our insurance problems. So get this. What they're trying to do now is you got to love Florida, right? So they're upset that the ratings agencies that we talked about a couple of months ago was thinking about downgrading all the Florida insurance companies because for reinsurance purposes, which means that everybody would be in violation of their mortgage because they wouldn't have the proper insurance company with the right rating. So what are they talking about doing now? Changing rating companies, right? So instead of fixing the problem, they're like, hey, instead of dealing with this rating company that's not giving us good ratings, maybe we'll go find somebody who'll give us a better rating. Yeah, that'll fix the problem, Florida. Let's see how that works for you. Gotta love Florida legislators, right?
It sounds a little bit like my love life, right? If you can't get the girl that appreciates your all of your talents, you switch Switch them up. Why not?
Crosby,
He wants
Stills,
to
Nash.
appreciate your finer qualities, right?
Yep, CSN. So anyway, I just thought that's kind of funny. Wanted to bring that up, but let's get into the shout outs right away, Johnny, if you don't mind, because we got a lot of pretty cool stuff happening, stuff related to Paul and to Mike. I guess I'm going to start off with Paul's because it was the most kind of surprising one. So Paul, listen to this. I have our caller. We have a person that calls our database continuously. We have a very large database, so even calling, several hours a day, 5 days a week, it's barely we could hit the whole database like twice. But anyway, we have this guy, Sam, who's calling our database, and he's trying to get into the NBA. He just got picked by Iowa, Johnny, for the G League. So Sam just got picked up. He was signed for the G League. Cool. Sam tried out last year. He was kicking butt. Then he got COVID. Then he bounced around a couple of G League teams, but Iowa picked him up, and it looks like he's going to do great this year. So I'm excited. So in between, while he was training, he was working for me, making phone calls. He's a really great guy. And he said, Jim, you got to call this guy Solomon. And I'm like, okay. And I kind of remembered Solomon's name, but I didn't remember much about him. So we started talking, and he was saying how he wanted to buy a property for a relative who's in a wheelchair. Okay. And he's getting some. Here's Ross. Hold on here a second. Hey, Ross, how you doing, man?
I'm well, thank you.
Good. This is Ross Komarinetz from Brightway Insurance, Juno Beach office. Johnny, I'm not going to let you do the whole intro right now. I'll continue with this story. Hold on. So Solomon says, yeah, I want to buy this property. And then he's inspiring me why he wants to buy this property, because he's trying to get it for his niece who's in a wheelchair, and he wants to make sure she has a safe place and everything, and he's buying it for her. And I'm like, wow, what a great story. So then I'm thinking, Solomon, when was the first time that we had talked to each other? Because I feel like we have talked in the past. And then I'm looking through my notes in my database, and I see that he first called us, Paul, in September 2013, Solomon. And he goes, I remember, I go, are you a radio listener? He goes, yeah, I'm a big radio fan. And he goes, I remember exactly how I met you. I was in trouble with my mortgage. I was going to lose my house. I called you guys up. I went over to your lawyer, he said, right, which was Paul Krasker, the Krasker Law Office, Paul Krasker. I'm sure he was working with the loan modification department. And this week, Paul, he's paying off the mortgage in full. You saved the house, and he's paying off the mortgage in full. I got tingles right now just telling you. Is that awesome?
9 years later. That's
9 years later, he's paid off the house. He didn't lose the house. He kept the house like he wanted. Paul got him into the loan mod. He complied with all the terms like you're supposed to. And now the house is free and clear this week. And I'm just so happy for him. And this is the power of the one-stop real estate shop at Florida Talk Real Estate.
It's nice to hear.
Yeah, isn't it? And Paul, you and your team over there have affected thousands of people like that over the years when we were going through that, thousands and thousands. If anybody has built up good karma, it's you, because of all the things that you've done. You've really helped the community when we're in a really bad time. Johnny, remember back in the day when the crisis was just at its peak, and 6 out of 10 properties on the MLS were foreclosures or short sales?
Yeah.
Paul, when the media needed to reach out to create a system to help people, because the news channels were getting so many calls because residents didn't know what to do and everything, they put together a group of panel of people, of real professionals that, true professionals that will actually go out and help you, and put it together. And Paul was one of the main people that spearheaded that on Channel 5, and it was awesome, WPTV. So I remember being on the phone call banks because Paul invited us, thank God. And we took hundreds of phone calls during those telethons. Do you remember that?
Remember, we just had to answer the phone. We tried to have a conversation with people.
Impossible.
And then we just decided, forget it. Now we're just going to take your name and telephone number and hang up the phone and call you later. Yeah.
Yeah, that's exactly what we had to do. There were so many calls calling. It was just like, name, number, call you back tomorrow. And that's what it is. And it was hours. And we were on the air for a couple of hours, I think. several times. It wasn't like just like a half-hour thing or anything. It was serious. And
Was the phone bank on the air? I'm picturing like an old-fashioned telethon,
Yeah.
right? So
it was an old-fashioned telethon. We
you
were
guys
in
are
a
picking up the phone and
Yeah.
pretending to write.
no, we weren't pretending.
Yeah, this was the real deal, and they were terrific through the whole downturn. I really don't know what the other channels were doing, and I'm sure they were making an effort as well. But News Channel 5 was really on top of trying to help their constituents, and had us on several different times and talk about different things. I commend them.
Yeah, it's awesome. So thank you. And Solomon said to say thank you because I told him you were coming on the air this week, and he said thank you so much. And now I'm going to be helping him buy a property for his niece now. So we went from, hey, I'm going to lose my property, please help me, and we were the life raft, if you will. And now he's financially strong. He's going to be helping out a relative and passing it forward. So that's awesome.
So Jim, if you'll send me his full name after the show, I just want to make sure, some of those modifications had a forgiveness at the end. We'll put $100,000 on the side, and if you make all your payments, we'll forgive it. Some of the banks are now sending out those letters, because we've had a few people call us up and say thank you, and we're ready to make our last payment. Is there anything special we need to do? And we say, yeah. You need to make sure, if there was forgiveness on the back end, that you get some acknowledgement that the loan's paid in full. And the other thing you have to do in that circumstance, just in case there's any other listeners out there, if there was a forgiveness at the end, the bank sends you a 1099-C and suggests that that's a taxable event for you, the wipeout of $100,000. The bank treats it like they gave you $100,000.
Right.
And so you've got to talk to your accountant, because if at the time that the forgiveness was granted, i.e. at the loan modification time, you were unable to make that payment, most accountants will tell you, and I can't give tax advice, but most accountants will say that you can fill out a form and say that you were insolvent at the time that you made this arrangement with the bank, and you can get that forgiven by the IRS.
Yes, that's important. I forgot about the 1099-C with the forgiveness. So thank you, Paul, for I'm going to actually call Solomon, but I'll make sure that I get you the information too. But I'll call Solomon and remind.
Yeah, because I could just check his file. If there was no, don't call him unless there's a reason to call him.
Yeah.
If it was just a straight line payoff, then he doesn't have to do anything.
Okay, good. That's really important. And yeah, a lot of people could claim insolvency. You don't have to be insolvent now. You had to be insolvent at the time that you were doing the deal, is what I think Jared from Perry CPA Group will tell you. But I'm not an accountant.
Yeah, I've had a couple of other CPAs offer the same advice, but some CPAs don't even know about the ability to declare that non-taxable income.
Yeah. So that's really important. But thank you, Paul, again. And Solomon, congratulations.
Yes.
I also want to give a shout out to Richard and Kathy and Greg. Richard and Kathy just closed on a deal with me out in the acreage. It was the 3-bedroom, 2-bath home that was in the acreage. I think we were the third least expensive 3-bedroom home in the acreage at the time. We were trying to push the Hometown Heroes program for that really hard, Mike. Remember that? We were advertising it really hard for that.
Sure.
Because if somebody had bought that house, even at list price, if they were doing VA financing and they qualified for this Hometown Heroes program, they would have had to pull no money out of their pocket to buy the house. The closing costs, down payment, well, no down payment for VA, but the closing costs and prepaids would have been picked up in the Hometown Heroes program, and they could have walked into the house with keys without paying a dime to get into the house. How crazy is that? And FHA buyers could have done it, I think, for only $9,000. I think it was $9,000. They could have moved in. Yeah, out of pocket. But Unfortunately, nobody used the Hometown Heroes program. We came close, but we did get a buyer. So congratulations, Richard and Kathy. They started their new life. Man, it was pretty amazing when I met with them. They were referred to us from a big fan from the radio show, Greg. So Greg C. And thank you, Greg, for referring us out to Richard and Kathy. I'm forever indebted to you. You're going to be getting a little gift in the mail saying thank you for introducing me to Richard and Kathy. And Richard and Kathy decided the husband owned a pool service. So he needed to sell his pool service. Then he needed to move to Leesburg because that's where they wanted to move. And they needed to buy a new pool service up there, find a new one to buy, and then work everything out and sell the house down here and move up there. And man, it was pretty smooth for them overall. They're very hard workers and very dedicated and focused on what they did. So they already had the house picked out and bought when they called me. So he sold the business while we were working on trying to sell the house, bought a new business up there. We sold the house. Now they're up there full time, loving Leesburg, and they're very happy. And they're really looking forward to the next chapter of their life. And I really appreciate it. And thank you so much for trusting us. They were so happy at the closing table. I have to tell you, though, that the market has shifted. That house took us more than 30 days to sell. That house, 4 months earlier would have taken 3 days to sell. We did not have multiple offers on that house as hard as we tried. We still got a very healthy price for it and everybody was happy, but it's a different way than what people expect in today's market. I was talking to another good realtor friend of mine, Jim, who works for a different brokerage. And he was telling me how, quote, he wasn't real happy with the market. He put a house on the market recently and it wasn't, he goes, I think it's been on the market a couple of days and I haven't had a showing yet. That's happened to me a couple of times. Okay. So the market is changing a little bit. That doesn't mean you can't sell your house though. If you price it right and it's valued right compared to the rest of the neighborhood, size and condition, and it's priced right, you can still get good prices, even the upper end of the neighborhood, whatever the upper end is. Here's the trick for sellers, because we're not going to be talking to sellers too much on the show. The trick for sellers is don't overprice your house. And if you do overprice your house, react to the market quickly. Don't sit there and be stubborn and go, my house is worth more. I don't care what's happening right now. Unless you really don't care if you don't want to sell the house. If you don't care if your house sells or not, and you're just throwing it out there, that's one thing. But if you're selling your house, okay, make sure that you price it right and be comparative. And the other thing is, your realtor better be checking those pendings and close like every day. Making sure that nobody's and actives, making sure nobody's undercutting you with price reductions. And you get blindsided that all of a sudden 4 other houses in your neighborhood sold out from under you, pretty close price to yours, but they just started undercutting you on price and your realtor wasn't keeping tabs of what's going on. So be very competitive out there, but you could still do very well. It's not a crisis situation. And later when we talk about 2008, I don't mean that we're going through a crash like 2008. I'm just saying interest rates are 2008.
Yeah, you got my mind spinning a little bit there, thinking like, what is, other than interest rate, what is the same with 2008 as it is now? Because you remember what happened right now after 2008.
Yeah, Paul, the last time I checked, foreclosure rates, or I shouldn't say foreclosure rates, people that are at least 30 days behind on their mortgage, the last report I saw was like 0.75%.
Yeah, it's kicked up in the last month.
It has.
Yes, but the difference is that everybody who gets that foreclosure notice, not everybody, but most people have equity in their house. So they're going with a traditional sales route as opposed to a short sale. And they probably have the right mindset for today's market, which is don't hold out for the top dollar, price yourself right, move.
It's funny that you mentioned that, Paul, because I'm in the process now. We were appointed by a mediator to handle the sale of a divorce, and it's in triple foreclosure, right? So it had an HOA foreclosure, a foreclosure on the home equity line of credit, and a foreclosure on the 1st. And the couple were still living in the house, and it was War of the Roses. It was not a good situation. So we're in litigation on that one right now, kind of. But the thing about that was when they're walking away with a significant amount of equity. Even though they're in a triple foreclosure, they have a ton of equity, which gives them a lot more options than back in 2008, if you will. Mm-hmm. But here's the thing. What I kept telling them, time is of the essence to you guys more than anything, because you're eating up your equity every day the house isn't sold. Is that correct, Paul?
Yeah. Once all three give notice of acceleration, they're accruing interest at the default rate. If it's a regular residential loan, that's 18%.
Wow. 18%?
Yeah.
Oh, I didn't know that. That's a figure I just learned. So I love having Paul on the show. 18%. So when you're in foreclosure,
it's definitely 18% on the first mortgage and the HELOC.
Mm-hmm. Right.
If it's an HOA or a condo, it's probably a lower, but it's still probably 10 or 12%.
Wow, but 18%. And then there's also the legal fees, right? Like once they file, that's a big hit to the equity in your house, right? Once just filing, right?
Those guys pour on the hours.
Yeah.
Pour on the hours. And they say they have to check the foreclosure docket of all three actions to know where they stand. So they'll be billing triple time.
Mm-hmm.
Yeah, you want to get it sold.
That's why I tell everybody, sell fast, fast, fast. Now, this couple, the one thing that they did that was very sharp was they priced it right. So here's the funny part. When we put it on the market, because it was a very long closing, when we put it on the market, all the neighbors came up to us, this is in May, and said, you're undercutting the neighborhood. You're undercutting the neighborhood. And I already saw the prices changing. So I was like, nope. And we got it sold in like 3 days at a very good price. And now, and we're closing now 3 months later. And now everybody has their prices right basically where we set our price at, right? So no more, we weren't like the undercutting anymore. We were there because we knew our numbers. You know the numbers.
Yeah.
Okay. So go ahead, Paul, please.
No, I've seen a lot of sellers turn around and say, I'm not asking for the highest price. I just took the average of the last 3 sales in here, and I'm going to hold out for that.
Yeah. Yep. There's a lot of people out there that are throwing their house on the market now in the final throes of the boom that we just had. And I say that in past tense. and they were thinking, well, if I'll throw it on the market for this, and if I don't get it, I don't get it. I don't care.
You know, I hear you on the mid-level and even the upper middle level of the market. The high end just keeps rolling.
It's still doing great?
I did a $95 million purchase in Palm Beach this summer. And it wasn't the highest sale. So,
yep. I saw there was one.
I think there are people out there who aren't affected by the economy or maybe even benefit by this type of economy in their business. And they're realizing that there's so few properties on the market and so many people who want them. I don't know if you saw the announcement this week by Related building the largest Class A office building in downtown West Palm Beach.
Right across the street from the one that is currently the largest downtown office building in West Palm Beach, right across the street from it, basically.
Next door to its sister property that's fully 88% leased now. Mm-hmm. And they also own Esperante, Phillips Point, and one Flagler. So they're going to have 5 Class A buildings, and they think they're going to be fully leased in 5 years.
Yeah.
So if you factor in that many people coming to West Palm, and most of their leases have been relocations from up north, that's 5,000 people making $1 million a year or more relocated.
Yeah, exactly. Mm-hmm.
I don't know how we can't hold prices in that context.
Yeah, it's going to be scattered. Like another part of the market that's going to stay stronger is going to be the under 400,000. That's going to stay stronger, kind of, as long as the house is in good condition.
I was going to say, show me one property under $400,000 that's CBS blocked.
Mm-hmm.
Show me one property on the market that stays on there more than 5 days.
Yeah, exactly. So it's going to be scattered. So you can't just take a blanket wand and say, this is how the market's going to be. It's going to be all different types of things. And you got to understand where you are, like where your position is in that. I'm of the opinion that we are going to see price drops. I've been saying this on the air. I've been sticking my neck out and been saying this on the air for several months. The economists are saying no, but now a couple of economists are cracking now. I just saw that. I think it was Redfin, the Redfin economist who told us that we were supposed to have 15% appreciation this year, is now saying that over the next 12 months, no, not by the end of the year, but over the next 12 months, he could see a 5% decline. Now we're talking nationally, and we're talking about national figures there, but now we're getting some of the economists thinking maybe we aren't going to continue to see price appreciation.
But when they say a 5% decline, they're talking about a 5% decline in their 15% prediction to a.
No, they're thinking that a 5% loss in prices. So if we were at 100, right, and he was originally projecting we would go up to 115. Now he's saying he can see in the next 12 months, not by the end of the year, but in the next 12 months, that we would be down to 95, right, instead of being at 115. That's what, and I'm seeing more and more people that way. If the Fed does do the 1 point interest rate increase on Tuesday or Wednesday, I forget which day they're coming out, I think that's going to be a shock to the system. And I think the interest rates are going to be really reflected on that. And then we'll have to see what happens with the buyers at that point. But Paul's point of the luxury, they really don't use loans. So the interest rates really don't affect them on that level. Wouldn't you say that's true, Paul?
It's 100% true.
Yeah.
I would say of the last 30 deals that I did in historic districts or high-end golf club communities or Palm Beach, last 30 deals, maybe 2 loans, and those were only because of convenience, that somebody wanted to keep their money in the market and they get a rate that's reasonably low. Most of these big purchases, they're still getting rates in the 4s.
Wow.
Because of their borrowing capacity and their ability to repay, and still smart money.
Johnny, let's go ahead and take a break. On the flip side, Ross, we're going to talk to you, and we're going to talk about this new thing about trying to get a different ratings agency in the state of Florida to fix our system. So we're going to talk about that a little bit. Okay. And we're also going to talk about, it was really interesting. Ross, also, the other thing I want to talk about, Ross, check this out. We have a customer, Marshall and Chrissy, that are thinking new construction or used home, resale home, right? So they're not sure. So we went and gave Ross 3 insurance quotes. We asked Ross to do 3 insurance quotes, one for new construction and one for a 2020 home. So it's kind of new. And then another one that was a little older. And we're going to talk about the price differentials in the insurance. So I thought that was kind of interesting too.
Very good. Looks like we got a lot of good information coming up. And if you've been listening to that first segment, great examples why you need to work with people that are so very good at what they do. There's plenty out there that are good at what they do. I got a team assembled. They're great at what they do. It's your one-stop real estate shop. It's FloridaTalkRealEstate.com. We call it the one-stop real estate shop for a reason. You get a team of pros. These are professionals in their field. And as you've listened to Saturday after Saturday, man, they are so good at what they do. They work cohesively together. It's about trying to get things done right by you. What are you trying to get done? Here's your options. Let's see if we can get it done for you. You need those professionals in your life. When you're buying a home, you're selling a home, you're stuck with a home, you don't know what to do. Go to FloridaTalkRealEstate.com. Get access to the entire team. Your one-stop real estate shop. Remember, we're on Facebook and YouTube as well, but that .com is important. Use it, know it, love it, and share it. You can help people out tremendously by sending them to FloridaTalkRealEstate.com. 4 minutes from now, we're back at it. Plenty to get into on a Saturday. Thanks for being with us every Saturday right here. It's Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hey there, happy Saturday. I'm the CBS 12 Storm Track meteorologist, Zach Kobe. A few flood advisories are possible this afternoon as more rounds of showers and thunderstorms progress across the Sunshine State. We'll have daytime highs, though, topping out in the mid to upper 80s, a bit tempered for highs due to that cloud cover.
This report is sponsored by Wendy's. Try Wendy's new home-style French toast sticks today. Wendy's new home-style French toast sticks are so good, some are saying they're better than their mom's French toast. Perfectly crispy on the outside, perfectly fluffy on the inside, perfectly perfect in every way. Try Wendy's new home-style French toast sticks today and see if they're better than your mom's.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's your toll-free number. You're welcome to dial that up. And we have a 2-hour chunk where we can handle your questions, comments, concerns in the world of real estate. And we, means me, and of course, the team of professionals you have every Saturday. 2 hours of infotainment, 9 until 11, Florida Talk Real Estate. That number again, 877-927-6969. If you dial it up, Jimothy will line you up there. And if you make it, we'll take it. That's your phone calls, questions, comments, concerns. Of course, you just want to be a part of the conversation we're having. Don't be shy. Go ahead and dial that up on a Saturday. Thank you for being with us, whether you're on the radio, on your free download, your iHeartRadio app. Maybe you're live streaming with us, Facebook or YouTube. That's Florida Talk Real Estate on both. Remember, Florida Talk Real Estate is also a .com, your one-stop real estate shop, FloridaTalkRealEstate.com. Johnny C., well, that's me. Mike Rauch, the mortgage guy from the mortgage firm, is with us on a Saturday. Hello, Michael.
Hey, Johnny C. Yep, I'm here this morning. Love that. We got a little tour of South Florida there from Paul while if you were watching on Facebook. That was that's a reminder of why we love it down here. Like you could see in my background, see the sunlight coming through there.
Yeah.
When we started, it was actually raining on me, Johnny. So there's South Florida for you. It's raining this morning, and now it's beautiful and sunny out.
I'll take you for the tour. I'm staying at Islamorada Resort down in Islamorada.
Ah.
And I was going to try to broadcast from outside, which is just pretty spectacular. But they're all 4-bedroom villas with 2-3 porches and a spectacular beach.
Look at this.
But there's somebody out there with calypso music, so I'll head inside.
Well, if you are streaming with us, you just saw that Paul has a wonderful backdrop for a weekend. That's Paul Krasker with the law offices of Paul A. Krasker. That's right. The big dog is with us, even though he's in Islamorada in a sweet setting. Nice to have you with us, Paul.
Yeah, it's great to be here.
Great to have you.
Thanks for joining on vacation too, Paul. That's
thank you.
I didn't realize that when Jim and I talked a few weeks ago that this was the weekend I was going to be down here, but great technology that you guys have. Makes it easy to participate.
Well, thank you for setting aside a little bit of time to do just that on a Saturday. And thanks for Ross Komarinetz, Brightway Insurance, Juno Beach, for being with us on a Saturday. How are you there, Ross?
Doing well. Good to see everybody. I want to thank Michael for the invite to the show today. Thank you.
What happened? I sent you an email.
You sent everybody else an email.
No, I put Ross Komarinetz in there.
Not on the email that Mike forwarded me.
Really? I'm sorry.
Maybe you spelled Ross wrong. It's a tough one.
You can give me a noogie next time you see me, Ross. Sorry about that, dude. Sorry.
Yeah,
you didn't put the.
No. This is a swirly. You're getting a swirly.
Oh no.
Oh, I hate those. Those are worse.
We know what Jim's got in his future. That's Jim DePola with the Florida Home Pros team. That's a top producing Keller Williams team. I tell you all the time, Keller Williams Innovations, you'll find the Florida Home Pros. They're Jimmy D. How you doing, my friend?
Hey, good. I'm just trying to set up. I'm glad that you guys were talking a little bit because I'm trying to set up the insurance stuff that we talked about with Ross over the week because I thought it was very interesting. I want to make sure I get the right information here. Hold on. Okay, good. Okay, I got it. Okay. So, Ross, even though I didn't try to ditch you, I had a whole segment, so I had to have you here. So I'm glad you, Mike, thank you for saving the day for me. Thank you.
Hey, you know me. I'm a troubleshooter, problem solver.
Thank you. And John's supposed to be calling in just a little bit. John has an insurance question for Ross. So I said, why don't you give a call into the show? Because John is a big fan of the show. He comes in and checks it out every week. And his insurance company just dumped him. So he needs Ross. But Ross, so the first thing I want to talk about is, you heard about this company, Demotech, which is a ratings agency, right? And then this is the way I understand it, right? Demotech is a certified rating agency. I guess there's like 4 of them around. And that they kind of are the umpire watchdog to make sure that the companies that are insuring policies down here, that they are financially sound and that they have, and there's a rating system. And mortgage companies in their notes require you to be insured by a certain standard, a certain level with an insurance company that's reputable. I don't know the ratings, but let's just call it A rating or whatever. Okay. And then Demotech is now saying that the insurance companies down here are so at risk of going bankrupt that they're thinking about reducing the rating systems. And the reason why they're doing that is the reinsurance companies are basically telling the ratings agencies we're uncomfortable with what's happening in Florida specifically because of the amount of fraud that's going on down there. So Demotech is trying to reduce the ratings. Everybody had a conniption fit. The legislators went and had a special session. They took out some bubble gum and duct tape and Band-Aids, and they put something together which really isn't affecting much. And rates are still going up. Companies are still going bankrupt. And now I read a story yesterday that made me laugh out loud. So now how the legislator says they're going to fix this, Ross? I don't know if you read this article because it was like a day or two ago. They decided that maybe they're going to change rating agencies.
Yeah.
I don't know. I'm laughing because to me that just is so Florida. but what do you think about it? I mean, you're in the industry, you know more about that. Have you heard about that, number one? And what do you know about Demotech? And do you think this is going to solve the problem?
Well, it definitely won't solve the problem. I mean, Demotech's been rating Florida insurance companies since 1996. Mm-hmm. I don't think there's any company that has an AM Best rating, and that's typically the ratings that the mortgage company requires. I think they make a special exception for Florida. But it's definitely not going to fix the problem, because all those companies that went out of business, they were A-rated until they weren't.
Yeah, you're right about that. Paul, have you ever heard of an insurance mortgage company coming back to a homeowner and say, hey, you don't have the right insurance? So we're
2 times last week.
I'm sorry. Could you? I'm sorry. My mouth just dropped. What did you say?
Yeah, no,
it actually happened.
They're all focused on it now. Yeah.
Wow.
Well, so the recent ones have been. I bet they had UPC. Does that sound familiar?
Mm-hmm. That's who dropped John.
Because the mortgage companies initially were sending letters to their borrowers that had UPC, saying that if they needed to get new insurance, but with Citizens acting as the reinsurance for UPC as that backstop, that satisfied Fannie Mae and Freddie and all them. So they kind of pulled that back and said, hey, you're good for right now.
I should be clear. These were people who were submitting new policies for a loan, and the lender said the coverage that you're providing us is not acceptable to us.
I see.
Wow. What company was it? Do you know what carrier it was?
I don't. I just know that I got a panic call at 10 a.m. on a 3 p.m. closing saying they just rejected my insurance based on the insurance company. What do I do? And unfortunately, most of these people are going to a northern agent who only have a few appointments in Florida. And some of those are dated appointments that aren't the most appropriate coverage for them, or I don't know. So
yeah, they're just you're saying agents from the north, so out of Florida, they're just not familiar with the. I think I heard one of your colleagues, Ross, call it the wild west down here when it comes to insurance markets, right? It's just like crazy, just different. So. Yeah, that's. I would hate to have that insurance agent on my team, right? Who's writing a policy that actually can't be used for financing purposes.
It's so important. It's so important too. Like for real estate agents, if you're a listing agent and you're taking an offer and the mortgage company is not local, at least in Florida, and you're dealing with some loan officer or mortgage broker from, an 888 number, right? They're probably going to have the figures wrong about what you should budget for insurance down here in Florida. And that could screw up your deal really, really bad. And so one of the first things I do when I see out-of-state mortgage companies, when I vet the buyer's offer with the mortgage company they're turning in, one of the first questions I ask is, what are you budgeting for insurance on your plan?
Very good question.
Very first question I ask them. Normally it would be, Have you done everything needed to done in order to qualify for a loan? And did you get a loan prospect or DU underwriting? And did you actually have documents to look at to do that? But now first question I ask is, what do you know about our insurance issues down here? So
I don't know how you qualify somebody for a loan without a valid binding quote for insurance.
Paul, we as a listing agent, we always put quotes in from Brightway Insurance, Juno Beach, from Ross as part of our listing on the listing, so that when we have it up there, the buyer's agent can tell their mortgage company, here are some legitimate quotes to budget to make the offer.
It's super critical, Paul, to your point, that you have to on the pre-approval stage. So we get people out there shopping, pre-approved, and you have to have a realistic estimate on what the insurance is going to look like. And it's that number, of course, has been creeping up, through the years on what's realistic. And sometimes, like Ross, it used to be back in the day, I could say, hey, Ross, listen, super budget, whatever, they're going to need some number to get in. And Ross could usually find a way. Well, now that's much more difficult. So if you're not realistic about this number, you're going to find yourself in a world of pain when it comes to time to, get final underwriting review, because you need a legitimate insurance quote in order to get through that process.
Well, too, you got to make sure the quote is accurate. Just this week, I had one of my, referrals send me a quote back that I had quoted saying, hey, they've got this quote that is, it was like $2,000 less. And I wrote back and I was like, I don't know. Are they quoting it based on the wind mitigation report? And they said, yes. And so I couldn't figure it out. And I went back and I reversed engineered it. And they were giving them, not only credits that they weren't qualifying for, but additional credits, and then changing the rating of the construction. And yeah, it's going to be $2,000 less if you're not using the correct information. And then they would have gone to closing, the day before closing with a request for insurance, and then that person would have bound it $2,000 more. Who knows if it throws it off? But you got to make sure you have something accurate too.
Yeah, and the worst ones are the people who actually close with the mortgage company for $2,000 less, and then the inspector comes and says, "Why did you say this was a CBS block house with wind mitigation windows? None of that's accurate. Your real quote is $4,000 more than this cheap quote," and it throws off the mortgage. So they are going to be in tenuous situation. Yeah. You better know up front.
Yeah.
Absolutely.
You may not like the news, but it's the accurate news.
Yeah.
Yeah. Go to floridatalkrealestate.com. All this pieces together so very importantly. If you've never been through this experience, man, do you have to have great guidance. If you've been through the experience of buying or selling a home, you know how very involved this is and how these nuanced things can absolutely squash a deal at the closing table. Don't let that happen to you. Make sure you're closing if you're buying and selling. Go to floridatalkrealestate.com. Have pros working for you to make sure you're not running into these hurdles. And if you do run into the hurdles, make sure you got people good enough and able enough to be able to navigate around these really tricky waters to make sure you can get done what you're trying to get done. floridatalkrealestate.com.
Thank you, Johnny. Thank you. Let's get into the numbers on this. I'm actually just trying to pull up the last quote. So hold on here.
And you're talking about, you had Ross work up quotes for brand new construction and then a new home. What'd you say, 2020?
So I had we have a 2022 new construction, hasn't been built yet. We have a 2020 that was built that's a resale. That's what I'm trying to find right now, Ross. I can't find the third one. And then we have one that was 2003. So let me just read the numbers for the 2003 and the 2020 house, and then I'm gonna look for the 2022. Okay, Ross, I don't know if you could look it up. Do you know if you could look it up or no?
I got them. Yeah.
Okay, so I'm just gonna name the name of the street, so we're not gonna put in numbers. Okay, so Briarwood is, if I'm not mistaken, the 2020 house.
It is.
Okay, and then the total estimated premium. Now I'm only using the middle one, the recommended one, if you will. So for that one, if I'm not mistaken, it was $2,979.
Yes.
So the total policies under $3,000, $2,979, right? Now, the one for 2003, the 2003 home, which is Briarwood.
Ancient.
That one, Ross, I'm having a hard time pulling it up here. I'm sorry.
$5,709.
$5,709. So roughly $2,700, double. It's more than double, right? $2,700 or just under double, $2,700 more.
Yeah.
Ross, did as far as like carrier options, did that age gap make a huge difference on which insurers are actually writing?
Yes. Yeah. On the new builds, we had at least 6 or 7 carriers come back on the new constructions.
Mm-hmm.
And prior to last week, we would have only had 2 on the 2003 because it's most likely an original roof. And luckily we had a carrier open back up last week, but they're not writing business until October 1st. But it's kind of providing a little bit of relief in that kind of awkward pain point area.
Hey, wait a second. That's good news. So you have an insurer coming back into the
game. That's what I was thinking.
Yeah, I mean, it is. And that, they're a little bit more liberal on their roof age. So that's really nice. So it's a nice alternative to Citizens.
Okay, well, that's good
sometimes
to know.
Sometimes they're $1,000 more than Citizens, and sometimes they're cheaper. So, at least it's another option.
And then this is the part I don't get. On the 2022 house, it was actually more, if I read this right, Ross, and I might have got it wrong, I thought it was more than the 2020 house.
I mean, it is because the dwelling coverage is $120,000 more.
Okay, that's what I was wondering. Okay, yeah, because of the price point of the houses. Okay.
So am I hearing right that the 2020 is basically the same as new construction when it comes to this? So like it's new enough?
Right. Yeah. That's going to be considered new construction. You're going to get very favorable rates. What's nice too is, when it's new construction like this, you can get $1,000 hurricane deductible for a small bump in premium too. So you can get optimal deductibles. So, new construction is going to be a little bit better.
So, that's kind of interesting. So in this example, a real life example, it was about double, right? From an older home. And the older home was only 2003. Now, what happens if that house was 1980? Would the premium be any different? Let's assume that everything else is equal. The roof is okay. It's got protection. Will the 1980 house cost more just because it's 1980 versus 2003?
Absolutely. Yeah.
How much more do you think? Like percentage wise? I mean, is it
today,
really hard? It's just hard to tell.
Today's so different. I mean, because, the rating, all the companies are kind of doing single risk modeling. So they're taking a whole lot more information in to determine the rate than it used to be just kind of zip code, size of or type of construction and, dwelling coverage or what coverages you're offering. But there's a lot more that is going into it. We can give a general idea, kind of a little bit, but for the most part, I don't tell anybody anything until I get my hands on it and start quoting it.
So why do you think this one company came in? Just getting back to what you mentioned before, why do you think this one company came into the market? That's like the firefighter running into the burning building, it seems like.
Maybe they see a little bit of opportunity. Just because nobody's writing, maybe they're saying, hey, maybe we can take a little bit. They're not just completely wide open. And they actually put their hands on the house, every time they write a policy. So they do an interior and exterior inspection on the home. So, they come back down the road and say, hey, actually, this, and this, and, we don't want you, because
I almost like that better. I've never seen the insurance company come out first, kind of like an appraisal, right?
Well, they don't come out first. Once the
Oh,
policy is bound, then they will come out, and the carriers have 90 days to cancel the policy. So,
That
that's when
always-
the underwriting starts.
yeah. So let's talk about that for a second. So I know there's a lot of houses that are kind of dicey for the insurance industry. So how many of the people are you seeing? Because you work with so many agents and so many homeowners. How many people are you seeing coming back after they bought the house within that 90-day period and go, oh my gosh, I don't have insurance anymore because they dropped me because whatever. Is that happening a lot, or is it not that common?
It shouldn't, because us as agents are considered upfront underwriters.
Mm-hmm.
So we get all of that information, and we determine whether or not it should be eligible to go to that carrier for whatever particular reason. And if there's a deficiency where it's not eligible for that carrier, we need to know that and not submit it, so it ends up getting canceled. There are, like I said, there's 90 days for the carriers to underwrite the policy. They actually don't put their hands on any underwriting documents or start doing any research until that policy's been bound. Mm-hmm. So, once you submit the inspections or they send their inspectors out, maybe they notice something, but usually you can, rectify it and, within that 90-day period, unless it's something major. But for the most part, it shouldn't happen that often, but, it can,
Well, but there are a lot of times where you have an older roof and you have a homeowner that can't get in there before the closing to put on a new roof, and they say, well, I'm going to do it immediately after closing. And most insurance agents are supposed to rate it at the higher number and then re-rate it 90 days later once they put on the new roof. But there are a lot who just say, you know what, do the roof right after closing, and hopefully we get the roof done before the inspector comes out, and it will be a new roof. And I've had horrible problems with that because nobody can get a roof done in 30 days these days.
Right.
But as an agent, you're supposed to rate that as the old roof, and then it's not eligible for that coverage.
Right.
Now,
I hear you.
Citizens, if it's eligible for Citizens and you have a roofing contract with an estimated completion date within 45 days of the effective date, then you can write it with Citizens. But again, that 45-day number is, that's pretty tight, but you can work with Citizens and say, hey, this delay, we're working on it. We're showing progress and things like that, and kind of massage that 45-day limit a little bit. But outside of that, that's kind of your only option.
And does Citizens require it to be dried in, or the whole roof CO'd by 45 days?
CO'd. Like
wow.
Brand new roof, new permit, new roof age.
Of course, the tiles are supposed to sit on there for at least 2 weeks before they're put in. So that means you've got to get it done in 30 days.
Yeah.
So that was really good information, though, Ross. Thank you so much. And it was kind of good that we compared new construction to older construction and just see the price differentials. And as buyers, you really need to understand this. And you know what? As sellers, you need to understand this too. When we were selling Richard and Kathy's house that we were just talking about for the shout outs, one of the big negotiation problems that we had, and one of the reasons why it took a little longer to sell, was the age of the roof. It was 2005. Now, we believe it had, probably 5 years of useful life. And that's enough in order to get Citizens insurance, right? You need 3 years for useful life on the roof, right, Ross? Mm-hmm. And there was no signs of any wood rot. This was a very clean roof too, because there was no signs of fascia damage or soffit damage. There was no look like there were any leaks on the sheathing underneath over time. Sometimes you see stains there from previous damage and stuff. It was a very clean roof, but it was still 2005, and it spooks a lot of buyers at that point, unless you're willing to deal with the roof. So please understand your insurance stuff, and don't just say, I'm going to leave off with this, Ross, because it's a little bit of a laugh. Here's my favorite comment from sellers. Why don't they just go to my insurance company? They're insuring me. Right? That's my favorite. That's my favorite response. I know they're going to get insurance, so I got it. Right? So it doesn't work like that in the real world, right? Necessarily.
No, there's a 90% chance that whoever's insuring that house now is not writing new business on that house.
Exactly. So please know your numbers, understand the issues, and deal with right professionals. If you have any questions about homeowners insurance or any kind of insurance except for what's the one, health insurance?
Health. We don't do health.
Only thing he doesn't do is health. So you got any kind of things, car insurance, you want to bundle stuff, do whatever you want, go to Ross. But go to Ross, Brightway Insurance, Juno Beach. Just don't click in Brightway Insurance and go there and call the 800 number. Go to Brightway, Juno Beach. Get the great customer service that his staff offers. Let me tell you, your front desk people and Rodolfo are awesome. So even when Ross isn't around, he has a great staff. They're friendly. They're super nice. They're very informative. I feel like I'm talking to Ross when I'm dealing with Rodolfo in a lot of ways. So he was very highly trained by Ross. So great team. Make sure you go to Brightway Insurance, Juno Beach. Juno Beach.
Yeah, I have a really good story. We can do it after break. Just a really quick rundown of realtor, attorney, title, and insurance, and how grossly misinformed some people are.
Okay, let's go ahead and do that after the break, Johnny. We're going to go ahead and do that. We're also going to talk to Paul right after that story. We're going to talk to Paul about as-is contract law. We're going to talk about some of the things that really cause a lot of problems at the end of the closing, and Paul's advice on how to handle that kind of stuff.
Excellent. Lots of good information still coming your way. And of course, you're always invited to be a part of the show. If you want to dial it up right now, we'll get to your phone calls at 877-927-6969. If you're not comfortable on air, I totally understand. Remember, Florida Talk Real Estate is at .com. It's your one-stop real estate shop. You have access to the entire team. These pros, you get them all at FloridaTalkRealEstate.com. We're back 4 minutes from now. Great to have you with us every Saturday. Florida Talk Real Estate. We're right here on Real Radio.
Be like the smart kids, like the summa cum laude of your workplace.
What?
Tell your smart device to play Real Radio 92.1 on iHeartRadio.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is WCCR FM, West Palm Beach, Real Radio 92.1, powered by the law offices of Anajar and Levine Accident Attorneys. Been in an accident? Call 1-800-747-FREE. That's 1-800-747-3733. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. Your toll-free number. If you have a question, comment, concern, you want to jump into the conversation, don't be shy. Dial 877-927-6969. Our producer extraordinaire, Jimothy, he'll line you up. And of course, as always, you make the call. We'll take the call. We is me, Johnny C. Of course, Mike Rauch, the mortgage guy from the mortgage firm, is with us on the Saturday. Hello, Michael.
Hi there, Johnny. Hi, everybody. I heard Jim denigrating 888 numbers before, but he certainly didn't mean our 888 number, right?
No, not at all what he meant. That's the hotline that you'll find at floridatalkrealestate.com. Remember, you have access to that team, the entire team, your pros, your one-stop real estate shop, not only at floridatalkrealestate.com or the 888 number Mike just referenced, 888-973-7828. You'll find it at floridatalkrealestate.com. Paul Krasker is joining us from Alamorada this weekend.
That's right.
Fantastic. From the law offices of Paul Krasker. We got the big dog with us. Paul, how are you?
Doing great. Jim, I was thinking that if you have an extra 5 minutes today, I'd love to tell you a story of a $12 million fraud that I foiled a couple weeks ago.
Wow. A $12 million frog?
Yeah.
Frog? Okay, definitely.
Fraud.
Oh,
Fraud.
I was like, frog? What are you talking about?
Yeah, they're very expensive. The legs are delicious.
I was like, yeah, what is it? It was this like kind of like Tiffany egg thing or something. Oh, that's funny. Yeah, I definitely want to hear that. That's awesome. You know, we always try to find out. Was it a wire? Just curious. Was it a wire fraud?
No, if you want me to tell you, I'll tell you now.
No, I don't want to go off first. I want to talk to Ross about what Ross had to say. Then we're going to roll right into what Paul has to say. And then after the 10:30 break, we're going to talk about why it's 2008 and also talk about some really great tools for buyers that Mike's put together for his customers.
All right, lots coming up. We got Ross. That's the Ross that Jim was referencing. Ross Komarinetz, Brightway Insurance, Juno Beach. Hello, Ross.
Hello.
And Jimmy D's here, too. That's Jim DePola with the Florida Home Pros team. Top producing Keller Williams team is the Florida Home Pros with Keller Williams Innovations. Jimmy D, how you be?
I'm doing good. So, Johnny, what do you think Ross is going to talk about?
No, so this is actually kind of going to be a good segue for Paul, too. So about a month ago, somebody was emailing, he had an Esquire in his signature and was emailing me about doing some homeowners insurance quotes and sent him some quotes. He emailed me back some inspections. And it's a house that we already insure. So it appears that he's buying this house. Now, at the time, we noticed that he had already purchased the home from our current client. And so I was talking about wanting to move forward with the quotes that we had sent. And so we asked him for his current declarations page because he should have insurance already since he bought the house. And the response to me was, will you already insure the house? And I said, yes, we do insure that house. However, I need your insurance declarations page for the insurance that you have on the house. And he said, well, you should be able to accept that one because we did a lease back, whatever, where she's renting the house for a few months. And in our contract, we put that she had to maintain her insurance. And I said, well, her insurable interest in that home ended the date she sold that house.
Right.
Her insurance isn't valid no matter what you guys put in the contract. And so he was basically saying, hey, because we put this in the contract, that insurance is good. And I tried to explain to him, I said, if that house burns down today, nobody's getting any money, man.
Right.
Yep.
And so, Paul, you can go into how, just because there's an addendum to the contract that states something, that is no way, that doesn't mean it's correct, right, enforceable, legal.
Not at all. Not
and
at
the
all.
realtor should have known. And the guy told me, we do this all the time. I said, well, you've been doing it wrong, bud.
Thank God you haven't had a problem yet.
Yeah.
Yeah,
But the
you're
realtor,
100% right.
the title company, everybody should have you got to coordinate everybody in that situation.
Well, you can't contractually change laws, right? If there's a law that says you can't do something, can't commit murder, you can't have a contract with a third party that says, no, but between us, we can kill each other. And the same thing goes with the insurance. You can only insure an insurable interest. If you don't have ownership of the house, you can't insure it as the owner. You can insure it for a tenant policy.
Yep.
But that's about it.
And when I said she doesn't have insurable interest anymore, he said, sure she does. She's renting it.
Okay.
And when he told me we do this all the time, I was like, oh no.
And this is a lawyer.
That was the lawyer telling me.
But my question
you want to send the lawyer an email saying, I just want to clarify that you don't have any insurable interest.
I called him and went over it over the phone, and he was arguing with me about her insurable interest. And I was like, no.
I have a quick question on that, just very quick. Was the person you were talking to, did they specialize in real estate law? I'm not being facetious. I'm really asking.
I could look up his email signature real quick, but I don't know.
The reason why I'm bringing that up is this is one of the things I always talk to people that call from the show. It's like, look, if you're going to hire an attorney, there's so many people say, I'm going to hire an attorney. They just think attorneys, like they could do anything, right? And really, when you're talking about real estate law, you want to go to a real estate lawyer. If you're going to criminal, you want a criminal defense lawyer, right? If you're doing fraud cases, you want somebody specialized in fraud, probably, right? So they're not all the same. Just because they have a law degree doesn't mean they actually know everything you need to know in the field that you're working in. And I see so many mistakes made by other attorneys dealing with like quick claim deeds and things like that for transfer of property or things. And it doesn't hold muster with the title companies later because it wasn't done correctly, but a lawyer did it. And am I wrong about that, Paul? I'm not trying.
And I'd say one other more negative thing on top of that, which is that a lot of these lawyers are just trying to get you on the telephone. Whether or not you say what they want you to say is irrelevant. They just want to be able to put down in their notes that he talked to Ross that day and Ross said you're fully covered. And he's going to put that in his notes. And it doesn't matter that Ross didn't say that. When it comes time for a loss to occur and he doesn't have any insurance because the underwriter knows that Ross is right, then he's going to turn back and sue Ross and say, no, I had a long conversation with Ross and he assured me that we were covered. And that's why I say send him an email, put it in writing. So that
I went back and forth with him a little bit in email, and they actually coerced that her policy renewed after she sold the house, and they told her she had to renew her policy. So I got her on the phone last week, and I said, "Send me your closing statement. We're canceling your policy."
Yeah,
right.
Yeah, it's crazy. They just don't care what the law says. They just figured they could sue you because they're an attorney and they can hold you up for 2 years and you're not going to spend money on attorneys. You're just going to settle for $20,000 as opposed to pay your attorney.
So this is all about contract stuff, and that's why Ross thought it would be a good time to talk about with Paul Krasker. And I want to get into that now. We do have a caller named John. He does have an insurance question, but I really want to get into some of Paul's stuff first. So John, if you could just hold tight, I'd appreciate it. Okay. So Paul, one of the biggest problems I've been having with lately, from the buyer side and the seller side, several problems dealing with the final walkthrough. I cannot believe how many problems I've had with the final walkthrough lately. And I had one case. I'm not going to use like real life examples. I'm going to steal things from a couple of different cases and piece it together, because some of this stuff is still kind of active. But what happens, Paul, when you have, let's say, a 12 o'clock final walkthrough on the day of the closing? Okay, you have an as-is residential contract, final walkthrough day of closing, and the seller's not going to be closing, like signing the paperwork to close until like 5 o'clock. Okay, but the final walkthrough's at 12. Then the buyer comes over to the house and decides that the house is in total disarray. They're not ready to move. The stuff isn't out of the house yet. It's dirty, right? It isn't in quote broom swept condition, which I'm sure you're going to talk about that since I mentioned it on purpose.
I was just saying, why did you do that?
I know, but I know, but I did it on purpose. Okay, sorry, Paul. But so let's say the buyer comes, they're totally disappointed. There's no way you're going to get this done by 5 o'clock, at the time we're supposed to close. So we're out. We're not buying the house. Right. First of all, does the buyer have that right just to say, I'm not buying the house because the stuff isn't out of there at 12? Now, let's just say hypothetically that the seller says, I guarantee everything's going to be taken care of by 5.
Guarantee.
Yes, he says everything's going to be taken care of by 5. I had a problem and we're correcting it. But the buyer's like, nope. The house isn't ready. We're not closing.
Yeah. So there's a bunch of things to unpack in there. First of all,
intended.
Yeah.
Unpacking. I get it.
Yes. The first thing is that there is no 5 p.m. deadline anymore. There hasn't been for 15 years under the main contract. There's an argument to be said that everything needs to be done within the business day or business hours. But the reality is, in that circumstance, I would turn back to my buyer if they called me from the walkthrough and say, great, reschedule the walkthrough for 5 o'clock, go to the closing now, sign all your paperwork. I'll send an escrow letter to the closing agent saying this is to be held in escrow. The seller is currently in breach of contract. We're giving them until 5 p.m. to cure before we cancel, and hold these in escrow until you hear from me. And my written authorization is the only thing that can authorize closing, and you currently don't have it. So I think the seller's right. He has to be given the ability to close, and the buyer's right because they need to be able to do the walkthrough when the seller's out, period.
Mm-hmm.
So I think those are the first two concepts that need to be clarified.
Can that be a one-sided thing, Paul? So basically you can, as the buyer, you basically say, hey, title company, we're not happy. We're going to close today, but this is the terms under which the closing can find. That can be a one-sided. You don't have to get
the bottom line is the seller's in breach at that moment.
Yeah.
So the risk to the seller is that I take a very firm position and say, you told me to come at 12. I'm here at 12. You're not ready to close. I'll come tomorrow. But my sense is to avoid any back and forth arguments about what time of the day were you ready to close. I would come back at 5 and see if they've really done what they said they were going to do.
What would happen if hypothetically what would happen if the seller side told the buyers, hey, we're done, we're ready, the house is ready to be turned over, everything's been taken care of the day of closing, and the buyers refuse to come back to the house to look at it, and they just go, too bad, we don't care?
You have the right to do a walkthrough. You don't have to do a walkthrough. It's just for your protection. So,
but what happens if they said, no, we're not coming for the final walkthrough and we're not closing? And the seller's like, well, we did everything. The seller said, we did everything we were supposed to do. We were just not ready at 12 o'clock, but we were ready at the end of the day.
Sure. I've had these circumstances a bunch. I tell the sellers the same thing. Take a video of the house in its current condition. Send it to the closing agent. Say the buyer has an ability to come to the house. I've offered them to be able to come. They've refused to attend a closing walkthrough. The seller should go ahead and sign all their closing documents to show that they were ready, willing, and able. They've now got a video that shows that the house was in the condition it's required to be in as of the closing. And then I would declare the buyer in default. I would seek to retain their deposit, and I would put the property back on the market the next day to sell it to somebody else.
Mm-hmm.
Wow.
Now let me ask you, let me give you this other example of the same kind of thing, the final walkthrough issue. You have a seller, he or she have left the house. It was a post-closing occupancy. So there was a lease written for a short period of time of the people allowing to stay there after the closing. Okay. Mm-hmm. And so there was a second final walkthrough. There was the first final walkthrough for the closing itself, for the transfer of the property, then a second final walkthrough in order to release the escrow deposit.
Okay.
The buyers come, the new buyers or the new homeowners come in for the rental final walkthrough, and they're not happy with the condition of the house at all, right? Yep. Now, this is what I thought was interesting about this, was that in one of the closets, there was a rolling cart in the closet, okay? And it had it was like a kitchen pantry. So it had like a kitchen cart on rollers, so, a 3 or 4 tier cart, and it had all the foodstuffs on it. Well, when the family left, they took the cart, and behind that cart were the anchors in the walls for the old wire shelving in the closet. And then in each of the bathrooms, when they were going to clean the house, they took off the hanging bathroom mirrors that were like the vanities for the bathroom mirrors, and behind it where the openings were for the old medicine cabinets. Mm-hmm. But instead of closing it off with drywall, they just hung mirrors there. Now that had been like that for a very long time. So when the new buyers came, they said, we're not giving you back your deposit because all the holes in the closet and then the openings aren't closed off, and you didn't disclose it in the seller disclosure.
Sure.
Their argument was this wire shelving was never there when you bought the house. And also the mirrors on the wall, we didn't think that we had to disclose that there used to be medicine cabinets behind it. And so the sellers didn't want to budge. The buyers didn't want to budge. The escrow sat there for weeks and weeks while we tried to hammer it out. What about that? Like about disclosing like that kind of thing? It was such a hard thing. I told him I didn't know who was right in that situation. I had no idea who had the proper right, if you will, in that.
Yeah, I don't think anybody's right in that circumstance. It's gray areas. It's got to be worked through. As you can imagine, there's no appellate case law on disclosure of removal of wire pantry shelving.
Yeah.
To get to a trial, you have to spend about $20,000 in legal fees. And after the trial, if you lose, you have to probably spend about $15,000 to get an appellate ruling, which would be the first time anybody would ever get to read about that case. Even then, the specific facts of the case may eliminate any functional use as precedent moving forward, but nobody's going to spend $35,000 on a $600
remedy
wire shelving case. And you're the nicest guy in the world, and I know you mean it when you say you spent 2 weeks trying to work it out for them, but it's a
Paul's like
$1,000.
Paul wants to hit him over the head and be like, "Can you guys just figure this out?"
No,
please?
I turn back to people and say, my representation ended at the closing. If you're hiring me to proceed against the other side, I'm happy to take a $2,500 retainer and start moving forward. And and everybody's very principled in that moment and said, absolutely, where do I send the money? And I tell them, and it usually doesn't come. Because they get off the phone and they talk to their spouse and they say, you're going to write a check for $2,500? We could go to whatever it is, Home Goods, and solve this problem for $800. What?
Yeah, I totally get it. The family that we were working with, they had gone through heck and back, and it was a school teacher and her husband, and you know how I am, Paul. You're
the nicest guy I know. What am I going to say?
I just feel like I wanted to help them out. I did the best I could. There was a compromise in that situation because it was smarter than going to mediation. They actually thought about mediation. We started picking people and stuff, which I just didn't want to do. But we ended up working it out. But the point I'm trying to make is these contracts are real. And you can't just willy-nilly decide, based on what your personal circumstance is, how you're going to handle the contract. I remember we have one, I call it Don't Be Tom. It's when I talk about the listing agreement or the listing agreement. In the listing agreement, one of the things I mention is that when is the real estate commissions due in a listing agreement? And everybody goes, well, when you close. And I go, yeah, that's one of three ways. And they're like, what? And I go, you could pay even if you don't close. You could have to pay the real estate commission even if you don't close, possibly. And they go, well, how's that? I go, the first way would be defaulting. If you defaulted in the contract, the sellers can sue you and the buyers can sue you if you're the seller for specific performance. And the buyer's agents and the listing agent, if they want to, the brokers could claim that they want their real estate commissions because they performed. Is that correct, Paul?
There's a gray area about the buyer's agent. I don't think the buyer's agent could sue because they're not in privity with the owner, but the listing agent certainly can sue. And then if the listing agent collects, he or she has to give 50% of their recovery to the buyer's agent.
Oh, that's how it works. So the listing agent gets it, because I've never gotten that far ever. Thank God. I don't ever want to be in that situation. I've been very blessed, never gone to mediation and never had to go to court for anything. So I'm very happy about that. 10 years, and I'm going to keep it that way as best I can. But in this one case, this guy, Tom, he sold a house up in St. Lucie County with me, and I got him way more money than he thought I was ever going to get him in a million years. And we were going to closing, and he signed an agreement with us to buy a house. We were selling his house and signed an agreement to buy a house. I went on vacation. I get a call from Nancy, my office manager, says, hey, I don't got great news for you. You better call Tom. And I'm like, what's going on? And they go, well, Tom bought a house. And I go, well, that's great. Which of our agents on our team, found the house for him because I was on vacation. And they go, oh, no, he went and got a house by himself. But that isn't even the bad news. The bad news is that he's canceling the contract on the sale of his property. I go, he can't do that. We've already gone through inspection. The appraisal has been ordered and it's been conducted. We're just waiting for the results. We have the final loan commitment based on appraisal. That's the only condition. Everything's ready to go. And the people sold their home based on the sale, the purchase of this property. They have no place to live. Plus, the other agent I'm working with is in the Hall of Fame of Keller Williams National. I go, this guy is not a mess around guy, right? So I warned that to the seller, and the seller said, I'm just going to cancel the contract. And I go, you can't do that, but why are you doing it? He goes, well, the new construction home I'm buying is going to take a lot longer to build. So now that I know what my house is worth and I know how fast you sold it and I know what price you got, I don't need you anymore. So I'm just going to keep the house. I'm going to stay here, wait for my other house to be built, and then I'm going to put my house back on the market for sale by owner. That was his plan. I told him, well, the problem that you're going to have with that is the buyer might sue you for specific performance. Plus, you might have to pay the real estate commissions if people claim it. I'm not an attorney. You really should lawyer up if you're going to go this way, because I think you're going to have problems. So he said, oh, yeah, can't you use that attorney from the radio show? I go, oh, you mean Paul Krasker? And he goes, yeah. And I go, I'd love to do that. The only problem is I can't this time. And he goes, why? And I go, because I'm hiring Paul Krasker. I go, because I'm going to have to hire Paul Krasker because you're making a huge mistake here. And so he was very upset. He cursed me out. He called me multiple times that day, drunker and drunker. And then he said I didn't know what I was doing and I was a bad agent and that all these other people told him that what I told him was incorrect. And then the next morning he called me up and he said, Jim, I talked to the developer. He's going to let me buy a new house in the same community so I can close on time with this house. But I had to give $50,000 more to make it hard. And it's hard. I can't. I gave him $50,000 today on top of my regular deposit. And it's hard. So you got to close this one, Jim. You've got to close it for me. That's what he told me, right? So
Tommy.
3 hours later, the appraisal came in because karma counts.
Oh, no.
And it came in low.
Oh.
So he wanted either us to reduce our commission or for the buyer to make up the difference. The buyer was very upset that he tried to walk out of the contract. So they were like, no way, we're not doing that. And then, of course, we weren't going to reduce our commission at that point. So he had to make up he had to take the lower appraised value. He still made like 10% more than he thought he was ever going to make before he met me. He told me it was impossible to get the number I got. And so we always say, don't be Tom when we talk about that clause in the contract. You can't just willy-nilly decide on your own, I'm not closing. If you go in a contract with somebody, his argument was, it's my house. I live here. I haven't moved a stick of furniture out. I can do what I want.
You can't force me to sell my house.
Can't force me to sell my house. No legal right to do that. So, Paul, that's not true at all, right? That's not true.
So there are number one in the contract, there are three remedies for a seller default. You could just take your money back, walk away.
Mm-hmm.
You could sue for specific performance, force that seller to close. And the third one is to sue for damages.
Mm-hmm.
So if the seller just decides, you know what, I'm going to stay, then and you don't want to sue for specific performance, then you can go buy another house, similar size, similar location. And if that other house costs you $40,000 more, you could sue for the $40,000 in damages.
Mm-hmm.
Tell the judge, I had this deal over here. He breached. I had to go over here and make this deal. Same size property, same everything else. Cost me another 40. I want a judgment against that guy. And the judge, in all likelihood, gives you that if it was an apples for apples purchase. The problem is collecting in Florida. And so I always tell people, you could be as principled as you want, and you could be 100% right on the law, and you could spend $20,000, $10,000, whatever it is to get that judgment. Let's say the guy doesn't even argue. The guy just doesn't even respond to the complaint. You could get a judgment against him for $20,000. It's going to sit on the wall. Well, in all likelihood, the guy doesn't have any assets. In all likelihood, it's a homestead property that he's living in. So it's not going to be something that you can attach to. And if it's homestead, then upon his passing, it's going to pass outside of his creditors. It's going to pass directly to his descendants. So, unless the guy has $300,000 sitting in a checking account, just waiting for somebody to grab at, most of these people are uncollectible, especially when they know you're on them.
What does a lawyer do in that case, Paul? Are you just making sure you're collecting your fees up front, right? Because isn't part of the judgment lawyer
So
fees?
I turn back to people and I beg them not to do it.
Yep.
And they tell me, I don't know why you're so weak. I don't know why you won't be aggressive in this circumstance. And I say, oh, you want aggressive? No problem. I can be as aggressive as you need me to be. I can get that judgment. If you want aggressive, instead of $10,000, wire me $20,000. You'll see how quick I move. The problem isn't there. I'll guarantee you I get a judgment, even though you can't, but I'll guarantee you I get a judgment. But let's talk about collection. And then you start talking to them about it lasts for 20 years. The property's homestead, it's going to go to his heirs outside of your judgment. You don't collect when he dies. And now we got to go looking for other things. And is that what you want your life to be about for the next 3 or 4 years? Do you want to keep calling me back and asking me if I tried to hit a bank account? And yeah, he's smart enough. He's already transferred all of his assets into an LLC bank account that I don't know about. Then he's got his mom as the manager of the LLC, so nobody can tell that it's his bank account. And it, it just becomes too much. Unless it's a big judgment, unless it's a big number, unless the guy's collectible. If he's got 3 boats, okay, let's go.
I was in a courtroom testifying 2 years after a failed closing over a $20,000 escrow dispute. Yeah. Right, 2 years after.
2 years later, yep.
Right, I'm testifying, right, as a witness for whoever. I got not for one or the other, but I was called and testified.
That's
just over 20,000, Paul. So what are the legal fees on a 2-year, case that actually goes in front of a judge?
Well, the problem is legal cases. I do a little bit of work, and then I stop for 60 days. And I do a little bit of work, and I stop for 60 days, and then I do a little bit of work, and then they set a trial for 8 months out.
Yeah.
And then you get to that trial docket, and they've got 7 cases on the trial docket, and only 3 go. So now I'm in the next trial docket, and now you're 2 years down the road. People forgot what they were even suing about. but yet, my billing on that might be $6,000 because I've only billed little bits at a time.
Yeah.
Well, that's one of the things that I came to learn about and then really enjoy and be appreciative that we got connected to the law office of Paul Krasker, because one of the things I like about Paul is that he isn't like an automatic litigator. And he tries to talk you out of litigation unless he feels like it's really worthwhile doing. Not just that you can win, but that you get a benefit of winning. Right? There's, as Paul just mentioned and showed you why, it isn't like that. So having somebody there to tell you what it's like in the real world. Look, I don't know how many of our customers where we had escrow disputes where Paul goes, look, this is the way the law is written, if you will, or this is what your rights are, but this is the way it's going to work in the real world. And logistically, this is how long it's going to take. This is what your results are probably going to be. And do you want to go through that? And I think that's so ethical for Paul to be honest and talk to you about that. It's just instead of just saying, oh, you got an awesome case, let's go forward and do it. And I have a lot of times where when people are thinking about lawsuits or stronger mediation, like mediation just to get to a lawsuit, I go, look, I know that you're probably going to win, but whether you're going to get the results you want, I'm not sure. And sometimes they're very emotional at that time because they think they're right. They were wronged and they want their pound of flesh and they want that other person to pay. And I'm like, it isn't going to be like that a lot of times. And they don't like that sometimes, but we're being honest with them.
Yeah, I had a circumstance a few years ago now where a seller put a property under contract. The buyer went to the 10th day of the inspection period, canceled the contract. I sent a release and cancellation around to all parties, and the seller refused to sign. I asked on what basis, and he said, I don't think they acted in good faith. I said, can you show me that provision in the contract? I'd be interested to know where you found that. The way I read it, it says in their sole and absolute discretion in paragraph 12A. And he said, well, I've litigated a bunch in New York, and I can tell you that every contract has an implied covenant of reasonableness and good faith efforts, and I want you to defend me in this case. And I said I wouldn't do it. And he cursed me out and found somebody else to take the case. $20,000, goes to court. Judge looks him in the eye and says, I don't understand about what paragraph. You don't understand about paragraph 12A. It was in their sole and absolute discretion. The guys come in and he said he had checked with the property appraiser's office. He didn't like what the taxes were going to be on the unit after he purchased it, and he terminated. That's all he needed to do. And frankly, he probably didn't even need to do that. And so the guy didn't like what the judge had to say, hired a second appellate lawyer, went to the 4th DCA, got skewered in a 4th DCA opinion, and he's out $35,000 of his own money. Court goes back to the trial court for the final ruling, and the judge awards the other party $55,000 for his legal fees because he's the prevailing party, and the contract literally says, paragraph 17, I think it is, you get your money back if you're the winner. And he calls me back and says, I can't believe this happened to me. And I laughed.
Right.
And he said, I want you to file a suit against that first lawyer who gave me
I knew you were going to say that, right?
And I just said, are you kidding me? I'm going to be the guy who testifies for the first lawyer because I told you were going to lose and you didn't listen. And you just shopped for somebody who was willing to take a shot at it for you. I'm sure that guy didn't tell you were going to win. He told you what his price was to take it to a judge and see if you're right. But crazy.
Yeah, so just be very careful when you're stepping into real estate arguments and thinking that you're righteously right and that you're going to take on the world, because it doesn't always work out like that. Paul,
I guess the lesson there is that, when everything goes right, it's fine. It's when the things go haywire that you really need people who can give you the right advice, know what you're doing. I think Jim, you mentioned he talked to his neighbors, right? Like, who's getting legal advice from their neighbors? Probably everybody gets legal advice from their family and their neighbors, right? But when it comes down to it, you better be working with someone who knows.
Yeah, and look, I say to people all the time when they ask me, do I need to hire you for buyer representation? I said, look, 80% of the time, this could go perfectly smoothly. The title is perfectly clear. There's no open permits. There's no liens. There's no anything. And there are no survey issues. And there's nothing wrong with the closing docs. And I was like an insurance policy. But that other 20% of the time, there could have been a title, lien, or permit issue that could cost you 6 times my fee 5 years later when you go to pull a permit or want to do something with your house or want to refinance. And then you're going to be disappointed you didn't hire me.
Yep. Yeah. Hey, Paul, I still want to talk to Mike about stuff, but I want to find out about the $12 million fraud thing that you uncovered. What happened?
I'll do it real quick.
Yeah. What happened?
I get a call from a client of mine who says that this lot in Palm Beach, one of the last vacant lots in Palm Beach, great location, just showed up on the internet as a listing from some agents in a, I won't say the name of the agency, but not a Keller Williams office from Kissimmee.
Okay. And
my client says, I saw it and it was under market and I just put it under contract. And I know that there was somebody else bidding against me. What do you think I should do? And I said, well, if it's that far under contract, why don't you try to flip the property to that other person? They want it, and you'll make a ridiculous amount of money for an hour and a half of work. And then I said to them, but I'm pretty sure this is not real. And
it's based on the price that they were paying.
And I said, look, there's nobody who has the money to own that lot in Palm Beach that isn't sophisticated enough to hire a real broker and market it at the right price. Why are they signing contracts with these 2 young agents in Kissimmee, Florida? And it just sounds like fraud to me. And they said, well, get the assignment worked out, and then we can investigate it, but let's control the deal first. And so we do that. And number one, this is becoming more and more popular, which is why I thought to say it on the radio for your listeners. People pretending to be somebody that owns a vacant lot. You don't have to do an inspection, so nobody shows up at the site. It's not a house that the inspector knocks on the door and the real homeowners are there saying, why are you inspecting my house? I live here. Then people catch the fraud. But if it's a vacant lot, nobody knows. And so I went back to the realtors and I said, how'd you get this listing? How do you know this person? And they all want to sound more sophisticated and more competent than they are. So they said, well, came in through a referral. Is this a good referral? Well, we don't really know them as well as others, and I look at their listings, they've never sold a house more than $500,000.
Mm-hmm.
This should have been a $20 million lot, but it was listed in the high single million numbers and was bid up by these two competitors. And so they have no experience in the marketplace. I asked them how they priced it out. Did they do a comparative market analysis to give this person advice? And he said, no. He said he wants to sell it quick and he's willing to price it below market to get a closing within 21 days. That's the next red flag. Quick closing, vacant lot, hasn't met the seller face to face, hasn't met them at the property. And I said, guys, I think this is fraud. I think we should alert the title underwriter and contact the FBI and try to force a meeting with this seller. And the agents were indignant that there's no way that could have happened to them. And instead of waiting for the FBI to get involved and try to get this person to agree to meet somebody or come to a closing table or something like that where you could catch the guy, they just went over to him and said, hey, we're going to need a copy of your license, which he gave them, with the right name, wrong face, etc. And then Social Security number, which they had. And then they said, well, the buyer's attorney doesn't think this is a real deal. Can you provide us with more information? Would you be willing to go to their notary to sign the closing documents? I know you said you're in New York. That's perfectly fine. We'll send a mobile notary to you. And then the interesting thing happens is he says, oh, no, it's definitely me. Have the title company call me. But at this point, he knows he's cooked.
Mm-hmm.
And he's not going to agree to meet anybody because the agents tipped him off. So the title company calls him and says, where are you right now? And he says, well, I'm in the hospital. And they say, great, what hospital?
India.
And he says, I'm up in New York, but I've got COVID. I'm in quarantine. And they said, oh, no problem at all. We don't need to go into the room. We just need to speak to you through the window. Well, I'm going to leave the hospital because they're not providing me great services.
Wow.
And they said, great, no problem. Tell us where you are, and we're going to send a mobile notary right now to square this up. Just give us a location. And he says, no, I'm going to go to my notary. I've got a notary. I'm not going to spend money on that. They say, don't worry about money. We're not going to charge you for the mobile notary at all. We just have to have our people do it. And then he said, okay, I'll get back to you in a half hour. And of course, I'm sure he threw the phone away, and that was the end of it.
So there was no deposits or anything? Did the buyer have any obligation with the contract?
Buyer put the deposit in my escrow account.
So can you just how does it get released?
Yeah, you just release it.
Oh, because the title company will say like it's fraud or something. They'll acknowledge it as a fraudulent thing, so you don't need the other party signature.
Correct.
Okay.
Correct.
Yeah. Wow, that's a wild one, Paul.
Yeah, and so I reported it to the underwriter, who reported it to all the other underwriters. And I don't know if you're on those lists from the title companies or not, but
I'm not.
You get you get a release that says if anybody is participating in the sale of a property located at, and then puts the address, Palm Beach, please contact us immediately and do not proceed forward with the closing. So they all know that this guy's trying to commit fraud on that lot.
That's pretty wild. We're going to switch gears. I think we only got like 9 minutes or something. So I want to try to squeeze in some stuff with Mike. Thank you for being so patient. Couple of things. We put out a commercial recently on the radio talking about the one-stop real estate shop. That's been out there. So if you're listening on the radio, kind of keep an eye out for that commercial. And Ross and Mike are making commercials right now in the process, and they'll be out on the terrestrial radio real soon. So keep an eye on that. Ross, there's not one reference to Hot Ross in that commercial, so I reject that commercial. We'll have to talk about that. and Mike, I'm not sure where you are with Jeannie on that, so we'll work on that commercial a little bit more to make sure you get it going. I don't know if you approved it or not yet, so we're going to get those running. But I wanted to talk a little bit about interest rates because it really is big news, but I also want to talk about this app because it's so awesome that I want to let buyers know about this thing. Okay, so first of all, Freddie Mac, the weekly report, last week we were at 5.89. That's the highest that we've been all year. A couple months earlier, we were at 5.81, like June. And then it stayed down under 5.8 until last week, and we got to 5.89. And now this week we hit 6.02. That's the first time we've been in the sixes since 2008. I read an economist report in the New York Times, and I learned something. The average interest rate over the last 40 years has changed, because I used to say 7 to 9%. Now I actually have a real number, the average over the last 40 years, because of the boom and bust period that we went through twice has changed the average interest rate, I thought. So the average interest rate over the last 40 years has been 7.87%. That's what the average interest rate has been over the last 40 years, okay, going back to 1980. So that's what the average is. We're at 6.02 right now for Freddie Mac.
Yeah.
That's, everybody's a little bit in shock, because I remember back in December, November of last year, they said, we might be into the fives, like the low fives by the end of December. And I was like, are you guys on crack? That's what I remember saying at the time. Are you guys on crack?
Yeah.
Who's
I remember
low fives?
We did a video talking about like how interest rates can affect your payment and, trying to time the market in that way. And I think on that one, we were even being extreme, talking about getting up to 5, right? We're going from 3 to 4. What happens at that one point? What happens if it goes from 4 to 5? And then here we are, right? 6 months later, or 8 months later, whatever it is, talking about 6%. So 3%. And
the 6%, I don't know how long. We're probably going to say bye-bye to 6.02 next week, or the week after next at the latest, because the Fed's going to come out next week. And I don't know if they're going to, everybody knows that they're going to do a 0.75. It's like 86%.
Another one, yeah.
Yeah, they thought another 0.75% increase, but now it's only 0.65. 65% of the people, in that realm that gets surveyed for this stuff are saying it's going to be 0.75. Only it dropped down to 65%. Why? Because there's another 25% now that believe we're going to go to 1.0. We've never had a 1.0. Yeah, a 1% increase. We've never had that in the history of the Fed Reserve. It's never happened before. If that happens, I think that we're going to go through an emotional tizzy fit. Okay, that's a technical term, by the way. I read that in Tom Friedman's column.
I was going to say that was in the Times, wasn't
yeah,
it?
that was in the Times, right? So I think everybody's going to have an emotional shock, and we're probably going to see some histrionics on the interest rate, kind of like when the first 0.75 came out earlier this year. We went up 0.55 almost immediately, and then over the next couple of weeks, we flattened out and lost about a quarter point of that, and then it went up again. So I think that we'll probably see that again. I think we'll be pretty far into that, getting into it. So just keep an eye on the interest rates. They're not going to change much I don't see them going down anytime soon. Now, because of that, this app Mike has, Matt, is there a name to the app, Mike? Or should I just call it Mike's app?
Well, no, I mean, it's not my app.
I know you didn't make it.
It's a pre-approval tool. It's kind of the idea, Jim. It's like something we've always talked about is know your numbers, right? And so knowing your numbers is really critical, even more so when movement on the interest rate, movement on insurance is, and especially if you're like pushing your limit on what you qualify for, right? You're basically hitting the top of what that to income ratio works. It's a house by house analysis, right? Like whether or not you can actually buy that house and qualify to close on your loan or not. And so when interest rates are on the move, the generic pre-approval, I've always hated, but that's what a lot of people in my position do, right? They get you pre-approved and they say, hey, okay, you're good for 450,000, right? And they send you out shopping, and agents will be out shopping with this pre-approval letter that says 450,000. Well, you know as well as I do that 450 on house A is a different monthly payment than 450,000 on house B, right? And so when you're pushing that limit, you just have to know your numbers. And so this tool allows agents and buyers, it's almost like a real-time payment calculator, but with real accurate information, right? Not just some estimator. It's like, here, what's the price you're going to offer on this home? What are the annual taxes on this?
Can I give you an example? We had Megan and Dylan, who are really kind of at the upper limits. They're first-time home buyers, and they're kind of at the upper limits of their budget, not what they can afford. That's two different numbers, right? So we don't try to push people up to what they can afford.
No, I say qualify for versus afford. Right. Afford to me is like they're in control of what they can afford and what their budget is. I'm in control of what their maximum qualifying payment is.
Right.
And
so
oftentimes those numbers are different.
Right. So they might be able to afford, I'm making up a number, $3,000 a month on mortgage payment, but they only feel comfortable at $2,200 a month. Right. So knowing that $2,200 a month, that's not a real number for Megan and Dylan. I'm just using numbers. Okay. But if you were to use that number, we started looking at 3 or 4 houses, and they were right at the upper limit of where they wanted for their budget. So now that Mike has this new app, we were able to put in one of the properties, the purchase price, the taxes, which we did through that app that they have on the tax. I forget if it's a tax collector or a property appraiser, but the real taxes were a very good estimate of the new taxes. And then also insurance quote from Ross. Okay, we plugged all that in there. And then it told us in order to keep to that $2,200 a month, what's the maximum offer that you can make? And in that case, I think I'm just making up numbers. It was like very specific. It's like, if you want to keep to $2,200 a month, you got to offer $364,965, right? It's like that. Okay. And I love that. I love it because then you can change things in the formula and it tells you what's happening. And on top of it, this is the other thing I love about this app, is that when your mortgage guy isn't around, which is rare for Mike, but when he isn't around, like at nights or weekends, and you're trying to throw in that offer, one of the things I hate on our buyer side is when you have an approval for, let's say, $500,000, but you're turning an offer for $465,000. And then the agent doesn't ask for an approval letter for $465,000. Well, this app, because Mike has it all set up that way, if he's not around, I can hit a button and it will give me an approval letter for that number, a fresh approval letter without Mike being involved. The other thing is, if you go over your budget, it goes into red and you can print out the letter. Isn't that awesome?
Hey, Jim, can I take the first shot at naming the app?
Go ahead. Yeah, let's. I'd like to have that. Yeah, what is it?
I think we should name it the Rauchinator.
Okay, that's good. Rauchinator. There you go.
I think we should say, put it through the Rauchinator and tell us what it says.
I like that.
Okay, we'll use that. Thank you, Paul. Thank you, everybody. Johnny, I know that you've been playing hurt today, so thank you for coming in.
Oh, truly my pleasure. It's always great to be a part of a really, really informative and valuable chunk of Saturdays. Look, I'd say informative and valuable because the infotainment is what we give you every Saturday, 2 hours worth, and valuable because, man, this team can be so valuable for you, your family and friends. Whether they're buying a home, selling a home, stuck with a home, they're not quite sure what to do. You got to go to people that are great at what they do. And at FloridaTalkRealEstate.com, you get just that. A team of pros. We call it your one-stop real estate shop for a reason, because you get the best of the best all in one place. FloridaTalkRealEstate.com. On Facebook, thanks for being with us. If you're streaming today, Florida Talk Real Estate on Facebook and YouTube as well. Thank you for tuning in and streaming. On Florida Talk Real Estate LLC, you'll see a ton of informational videos to consume. And you should. And maybe you can share those as well and put people on FloridaTalkRealEstate.com. You absolutely can change the arc of their future by simply sending them to FloridaTalkRealEstate.com. Mike Rauch, have a great weekend.
Thank you, Johnny. Time flew today. Good
Yes,
show, guys.
it
Thank
sure did. Ross Komarinetz, have a great weekend as well.
Thank you. You guys do the same.
Paul Krasker, thanks for being with us. Hope to see you soon. I hope you enjoy the rest of your weekend.
Great to see you. Will do.
And Jimmy
Have
D,
fun,
please
everybody.
enjoy your weekend, my friend.
Have awesome seafood down there for me, Paul. I'm jealous.
I'm heading
At
there
the
now.
locker room
You
coming
got
up
it.
next. They're going to take you for the next 4 hours. Remember, we are also Real Radio, home of Gator football, so be sticking around. We'll see you next Saturday, Florida Talk Real Estate, 9 to 11, right here on Real Radio.
See you guys.